Hello everyone, welcome to my channel. My name is Patrick. Okay, let's take a look of this technical chart of public bank. Current price is at 4.02. The resistance is, it managed to break the resistance. Okay, so now is in the range of this. The next resistance is at 4.05. The support is actually at 3.88. So far for this weeks, it never break below this support level. The next support level is 3.82. So let's see whether it can break new high. Once it break this resistance 4.01, 4.07, you will continue to rally higher to reach 4.2. Okay, this is the technical chart for this public bank. Let's continue to study its financial report. So today we'll look at two things. One is the cash flow statement of the public bank. The other one is this the details of this loan advance and financing, because we know this is the most important part of the bank asset. So we'll dive into the details here. Let's go into the cash flow statement first. For the cash flow statement, the things that I only will look for in this is this capex for the bank. I will see whether the capex is reducing or increase a lot. You can take a ratio 83 million divided by the profit they generated for the past 9 months. So for this capex, you just take 83 million divided by, for the 9 months profit is 4.3 billion. So it's only used very little. It's only 1.9% of its total profit. So, and comparing last year, it reduced a lot, which is a good sign also, meaning to say the bank is getting more efficient. Maintaining less capex is good for the shareholder. Okay, let's see this another important one, which is the dividend. Because when we invest in stock, we look for dividends. The dividend is growing comparing last year. Last year was 1.55 billion. So they have increased 100%, close to 4 billion in dividend alone. Okay. Then we continue to dive down to the details of their loan portfolio. Let's take a look of this loan advance and financing, because we know this is the most important asset for the bank. In here, right, we can see the percentage of the housing loan conceived is actually 139 million. So it's about 40% of its total loan book. And other term loan financing is the second largest. This one is also about 36%. Okay, this one 40%, this one 36%. Higher purchase for the car loans, all this is about 15%. Okay, so you can see here we got housing loan, we got term loan, personal loan. Okay, this higher purchase, then other syndicate term loans. Meaning to say, public bank join with other banks to offer loans to different entity. So the rest, there are some credit card loans here. Trust receipt, all these are very little. Revolving credit is quite high. RC, about 2.8% of his total loan book, 353 million. Then you see here is allowance for impairment. This one bank foresee it will be written off, meaning to say default. So they put an allowance here. You take this total amount, 3.7 divided by 353, you will get around 1%. So 1% of his book will be impaired in 12 months time. Stage 1, 2, 3 are different. Then some will impair in the more than after 1 year. So the other you can compare is comparing last year, 2.8 divided by 35345 is around 0.8%. So mean to say there is an improvement for this expected credit loss. And after you minus all this credit loss, right, you will get this 349. This is the current net loan book. Okay. So now next we look at by class. Yeah, classify for us already. This one, credit card, higher purchase, other financing like personal loans, all these company loans. So most of the loans actually come from individual. 207 divided by 353, that is 7%, which is good in terms of diversification. Because if you have a lot of corporate loans, which is in a very large number, anything going to default for one company, it will impact your loan book, and you will have losses. Because for company loans are sometimes the risk is high. And for individual, you diversify the risk already. Anything goes wrong, you can you can get back the property, sell at Lelong, recover some losses. So all this is safer the way I see. Okay. Another one you can see here is the by different type of customer. Okay, say by individual, you see 236, 353. 66% of his customer are individual. The rest are businesses, small and medium businesses, and big businesses. So which is quite diversified. So SME, normally SME loan type with you have personal guarantor on the individual of the company directors, so which is safer. So big corporate loan, Sendang Berhad, all this, sometimes the risk is higher. So you have other loans here. You got these non-financial institutions like brokerage firm here and insurance company, fund house, some other financial institutions, non-bank one borrowing from them. Okay, and they have government entity, foreign entity, because they have some branches in overseas. But the majority here is individual. Okay. Interest rate sensitivity here, as you see my first video, you know that when the OPR rate increase, it will impact their loan here. The variable will not impact the fixed rate, but will impact the variable rate. Variable rate here consists of the majority of the loan. You take the amount divided by 353 is around 78%. So that's the reason why I say when OPR rate increase, it will have positive impact for the loan book for banks. So they actually can charge higher interest and earn the spread more. So end up customer paying more interest, so good for the profit of the banks. But also need to be aware of the default rate, the impairment. So this is but for fixed rate, you see, it's only a little bit only. It's only 21%, because most of the time when we get housing loan, we will get the BR rate plus follow the market rate. For higher purchase, normally people take fixed rate. So it's here. Then there's other fixed rate like personal loans or this fixed rate financing. Okay. So this is the loan book, say maturity in 1 year. Okay, most of the money actually more than 5 years, because they are keep issuing new loan to their customer. 74% more than 5 years. Mean to say they are borrowing to serve the loans for 30 years, for their housing loan 35 years. Maximum FD is 5 years. They give you a little bit interest, then they take your money to loans to others. Then they earn the difference for prolonged period. So normally when we buy a house, if we serve for like 30, 35 years, 1 million property. At the end of the tenant, you calculate together with the principal plus the interest. Sometimes it will become 2.5 million or 3 million. The rest, you buy 1 million property, the balance the bank earn. Okay. By geographic distribution, this one also tell you most of the loans actually is from Malaysia. You write the loans 93% in Malaysia. Hong Kong, a little bit, 14 million is around 4%. Cambodia, they have branches in Cambodia and also other countries. Okay, today ends my sharing about this public bank cash flow and also the details of this his loan book. Let's continue tomorrow to see to go into details of other parts of his asset. Okay, thank you so much for your time. Please help me to share and like and subscribe. Thank you so much.